Markets, how to use it. The markets is the second level of data aggregation for price adjustment and evaluation. Portfolio level adjustments should be small and used as corrections to macroeconomic changes. The market level adjustments are more refined and should reflect trends occurring at a more specific level. Occupancy gap. There are two occupancy gaps that we measure performance by on the markets page. The first gap is a comp against last year. This indicates how full you are compared to the same point in time last year. A negative gap means you're trending behind your last year performance. The second gap is the gap against the market, which is the purple line in the occupancy bar chart. This indicates how your list of properties in the city compare to the surrounding market. Filter options. Quibble categorizes each listing by its performance metric. This is a great way to filter the listings and create a queue. Creating a queue of underperforming properties allows you to work all those listings with a consistent strategy. The same can be applied to star performers. Occupancy, ADR, and revenue. These are the metrics to evaluate to understand if your pricing strategy is working. For each of these metrics, we're looking at a snapshot of where we are and a forecast of where we're going. It's our job as revenue managers to determine if we're happy with the trajectory of the metrics and steer them to the best possible outcome. When you expand the data, yellow bars will appear to display the last year final position. Block days. I largely think of block days and reporting on them as troubleshooting data for analysts. When the numbers don't make sense, I always check for big blocks to explain the discrepancies.